Everybody, therefore, needs to own some Bitcoin. I'm not telling your listeners you have to own 100% Bitcoin. I think that's irresponsible. But the wrong answer is to own 0% of your portfolio in Bitcoin. So owning 0% Bitcoin is actually more risky than having a proper portfolio allocation. The question becomes, what is the proper portfolio allocation for the average listener? And that, in my opinion, just think of how astronomically mind-blowing this is. That being said, let's focus on the here and now. I think Bitcoin has easily at least 20 to 50 times upside from here. Using a price of $20,000 on Bitcoin, US dollars, versus my price target of 2 million in today's dollars, means that the market is only saying that I have a 1% chance of being right. Okay, 20,000 divided by 2 million is 1 in 100. 1 in 100 equals 1%. I'm not telling your listeners that I'm 100% certain that Bitcoin's going to $2 million US per Bitcoin in today's dollars, but I will tell you I have a far higher comfort level or probability than 1%. Another way of saying that is I'd say I'm at least 50% confident that it's going to my price target, which is to say Bitcoin should be trading at a
We often talk about owning Bitcoin as a decentralized option for ownership or government independence, but people need to remember there's way more to it. And here at the Daily Crypto, we believe Greg Foss is one of the best at explaining in simple words why you should own it and ensure you have the right amount on your portfolio. If you want to know the right percentage of allocation and the most shocking prediction we ever had in the channel, please watch the full video carefully. It will blow your mind. First, knowing why risk assets like Bitcoin are crucial for your portfolio is essential. And this takes us to how the economic system is poorly built.
The entire markets rest on the head of a pin of central bank interest rate policy globally. And a derivative of that, which just means a function of that, is the strength of the relative fiat currencies around the world. Okay, so every currency in the world trades relative to the US dollar. Now, I need your listeners to understand that all fiat currencies are melting ice cubes, okay? Their value is being debased over time because of the increased supply of these dollars, and all fiats are melting. It's just that the rate of decay is different amongst the fiat currencies at different times. And that's a function of interest rate policy in the various countries. So to keep it as simple as possible, the Bank of England today and the European Central Bank both raised interest rates by 50 basis points. And yesterday, the US Federal Reserve raised interest rates by 25 basis points. Those interest rate increases have impacts on the relative attractiveness of holding dollars holding currency in the various countries. All of this to say that it's really one trade that's happening now, and it's a rebalancing of the strength of the relative currencies in the world, where the US dollar has begun to weaken. And when the US dollar weakens, that is a good sign for risk assets. It causes a risk-on attitude. So emerging markets rally. And remember, though, it's all based on the interest rates. Second derivative or first derivative is the currency, and then the second derivative is the risk asset appetite. Okay, so let's not confuse it. If you want to watch anything, watch something called the DXY. It's the Dixie. It's the relative strength of the US dollar to 6 other global currencies, including the yen, the Great British pound, the Swiss franc, the euro, obviously. And this is a benchmark of relative strength of the US dollar. That hit a maximum of about 114 and is currently trading down at around 102 right now. Over time, you've seen things like gold rally because gold is priced in US dollars. But remember, gold priced in US dollars, as the US dollar falls, it makes it easier for foreigners to buy gold, right? Because their currency is relatively stronger. The price of gold goes up in US dollars, but it's not because of the US dollar as much as other people being able to buy gold in US dollars. So everything, these are all functions of the US dollar as global reserve currency. Well, we can get into the reasons as to why that's going to change over time, and this is why I love Bitcoin so much, but long-winded answer, it's all a function of the strength, relative strength of the US dollar and interest rate policy by the central bankers, the global central bankers.
This is not something people learn in school. Greg explains the reason.
That's exactly the financial education that we're trying to teach the world that does not get taught in school. Why does it not get taught in school? Because if they taught you how the financial system actually worked, you would never put your money in a bank because it's so risky. Well, then the system doesn't work because it's all based around banking. And they need you to hold your money in a bank as a deposit that doesn't earn an appropriate return on capital so that they can fund the rest of the Ponzi using your capital. Don't you see? That's why they can't teach you this. Because if they did, you wouldn't be a depositor with, as you say, all this money. You'd actually be an investor with assets in real estate and gold and Bitcoin and hard assets that maintain their value. They don't lose their value by holding your money in a bank account. In this world of quantitative easing, infinity, because it has to, it's the mathematics, they have to continue to print money or else the system collapses. Fiat debasement is a certainty, which means you need to own hard assets, of which a home is a hard asset. Bitcoin is a harder asset than a home, but you can't live in Bitcoin, right? You can't live in a Bitcoin. You have to live in a home. So it's going to continue only because, now there could be, it's not a straight line of the fiat, and the house prices don't go straight up, but over time they go up in a sawtooth manner because the fiat currency goes down in a sawtooth manner.
So, knowing that we live in a giant Ponzi scheme with the debasement of money and how banks work, how much percentage does Greg recommend allocating into Bitcoin?
First of all, I am a Bitcoin maxi from a digital asset perspective, meaning I think Bitcoin is the only digital asset that actually offers any true value in the digital asset ecosystem. I say that because it's the only truly decentralized protocol. And Ethereum, firstly, doesn't know its supply, claims it is disinflationary, meaning they're burning tokens, but that can be changed at any time at the whim of a proof of stake fiat type of system. I don't want to recreate the fiat system in Ethereum, okay? You may love smart contracts and all that. I don't own Bitcoin because of a smart contract. I own Bitcoin as a hedge against the fiat Ponzi. Now, everybody, therefore, needs to own some Bitcoin. I'm not telling your listeners you have to own 100% Bitcoin. I think that's irresponsible. But the wrong answer is to own 0% of your portfolio in Bitcoin. So owning 0% Bitcoin is actually more risky than having a proper portfolio allocation.
And are you ready for his shocking predictions? Remember, these are all made over his 30 years of experience and MUT.
That, in my opinion, is somewhere around 5% of your total net worth. Okay, you have to add in your house there. You got to add in your stocks. You got to subtract out debt. Okay, but at the end of the day, your total net worth, 5% of it should be allocated to Bitcoin. Why is that? Well, because I think Bitcoin is the greatest asymmetric investment opportunity I've ever seen in managing risk for over 30 years. I have a price target on Bitcoin of over $2 million per Bitcoin in today's dollars, Denny. In today's dollars. I'm not talking about dollars that in 20 years are going to be worth zero because your house is going to be worth 25 times what it's worth today. I'm talking Bitcoin in today's dollars, a $2 million price target. We could run through the math on that, but I will also say, I'm not the only one saying this. Fidelity, one of the 5 largest asset managers in the world, has a price target of $1 million by the year 2030 and $1 billion by the year 2040 in Bitcoin.
Crazy.
Now just think of how astronomically mind-blowing this is. Bitcoin has easily at least 20 to 50 times upside from here. Okay? So if your portfolio is 5% and that 5% goes up 20-fold, all of a sudden that 5% is turned into something pretty huge. Now you're probably supposed to risk manage it and pair some of your profits, but that's the beautiful thing about the asymmetry. It's insurance. And if it goes to zero, which it's not going to, but let's play a binary outcome. It's either worth 2 million or it's worth zero. Well, you've lost 5% of your portfolio, but it was valuable insurance against this fiat Ponzi. I'm going to get a little confusing in mathematics right now, but you guys need to learn math, okay? Because Bitcoin is mathematics and mathematics is the base layer of language. So don't say, oh my God, Foss is talking math. I'm going to close my ears, because that's not what I want you to do. I want you to try and understand what I'm saying here. Using a price of $20,000 on Bitcoin, US dollars, versus my price target of 2 million in today's dollars means that the market is only saying that I have a 1% chance of being right. Okay, 20,000 divided by 2 million is 1 in 100. 1 in 100 equals 1%. I'm not telling your listeners that I'm 100% certain that Bitcoin's going to $2 million US per Bitcoin in today's dollars, but I will tell you I have a far higher comfort level or probability than 1%. Another way of saying that is I'd say I'm at least 50% confident that it's going to my price target, which is to say Bitcoin should be trading at $1 million today, according to Foss. Now, Foss has 35 years of investing mistakes, okay? Bitcoin is a winner. I got involved in Bitcoin when it was under $1,000 a Bitcoin. And your listeners are going to say, oh, Foss, now you're trying to pump the bags because it's 20 times that high. And I'm saying, no, guys, Bitcoin's actually a better investment today on a risk-adjusted basis than it was when I got involved in 2016 at under $1,000. And the simple reason is because of the global government response to COVID and all the BS. I'm sorry to, I like to swear, I'm a trader. All the bullshit that the central banks and the money printing fools and clowns have forced upon the world. The reality is we are in a debt spiral that we can never recover from. And it's only a matter of time before the US dollar and all other global currencies continue to debase in value. And most importantly, some of them are going to fail.
Crazy right. A 20 to 50x upside from here. But keep watching as there's way more powerful content incoming.
5% is the target number. And incidentally, if the total world got to 5%, that is your $2 million price target in today's dollars. And I'm going to run through a little bit more math for you, Denny, and then you're going to kick me off the show because you said my listeners hate math. Well, fuck you guys, because you got to learn math, okay? You got to learn math. Math makes the world work. There's a total global assets are $900 trillion. That includes all global real estate, all stocks, all bonds, all debt. $900 trillion. I'm going to put you on the spot here, Denny. What is 5% of 900 trillion? 5% of $900 trillion is 45 trillion. What is 45 trillion divided by 21 million Bitcoin? It's over $2 million a Bitcoin. That's the price target, Denny, for everybody to get Bitcoin. Now, here's the crazy thing. When people figure this out, they're going to want a lot more than 5% of their net worth in Bitcoin. Okay? So that's how you get to a lot higher numbers over time, as global asset managers understand the beauty of this trade. So start small, be disciplined, get yourself to 5%. Don't try and trade it. Try and be disciplined and understand that this is your insurance policy.
Closing with Greg's final prediction, this is what we get.
I can give a target, but not a time. So my target is $2 million US per Bitcoin in today's dollars.
Right.
I'm not giving you a time. You guys figure that shit out. And if you want to know where Bitcoin price is in the year 2030 relative to today, it's higher. But I'm not going to tell you what the price is. So give a target, but not a time. Never give both. You answered your own question. You see, you are actually very good at doing this.
What do you think? Can Bitcoin eventually reach the 2 million price target and not only make us a ton of profit, but help us protect our capital and our kids' money? Let us know your thoughts in the comments below. And as usual, don't forget to leave a like and subscribe for more daily crypto. Thanks.